Hey guys, welcome to Mastermind Traders Academy. My name is Ray, and today we are going to be looking at how to trade the market in its simplest format. So, before I get into that, I want to say that one of the first things that a trader needs to do is to understand how the market actually works. It's important to understand how the market works because without that underlying information, you're simply just gambling. So, you do have a lot of traders that will say, oh, they want to learn a strategy. They want to learn a strategy. But how can you learn a strategy if you do not understand how and why that strategy actually works? And in order for you to become consistent, you have to be confident. And if you're not confident in your strategy, then you can kiss consistency goodbye. So, one of the first steps in becoming a Forex trader is simply understanding how the market works. Now, it's not a get rich quick, it's not multi level marketing. It is another means of financial freedom. It's another vehicle for financial freedom, simply put. So, I urge you guys, instead of jumping in trying to acquire a strategy that is deemed to be 100% win rate or 80% win rate, it's all crap because that is not there. Finding a 100% win rate strategy or even an 80% win rate strategy is simply not there. It's just a marketing tactic. Believe me, I should know because I have been trading for over 14 years. So, with my years of trading and my years of experience in the market, I kind of know what works and what doesn't. And one other thing that I will tell you that simply does not work is having a lot of indicators on your platform. Indicators were designed for you to fail. I cannot make it simpler than that. Indicators were designed for you to fail. Now, not to say there's not an indicator out there or a few indicators that will assist in your trade methodology. There is. But too many people have to put too much emphasis on having 5, 6, 7, 10 indicators on their chart. For what? And it goes back to saying, because of your lack of confidence in yourself and in how you analyze the market, you're putting your faith and trust in these lagging indicators. So that does not work. Now, our mission here at Mastermind Traders Academy is to help aspire traders become consistently profitable traders through trade psychology and market methodology. What do I mean by that? It simply means that what we do is basically help you adjust your mindset when it comes to the Forex market. What we do is help you to look at the market differently than how you're looking at it today. And at the end of this workshop, you're going to be understanding the difference between when you looked at the market prior to today and how you're going to be looking at the market when you all get back to your computer screens. So, another goal of ours is to help you develop a market methodology or a strategy. Not showing you how we trade because how I trade is going to be different from how you trade. My days in the market or my time frame in the market is going to be different from your time frame in the market. So there is no way you will ever have the same success or the same results as I do because of perception and because of our psychological makeup. So it's important that you're able to develop your own unique style of trading, and this is what we're here to help you to do. Now, we have been around for a while. We have done seminars in Jamaica. We have done seminars across the US. So we kind of know a thing or two about the Forex market. Over the years, we have trained many students. Some have gone off to become professional traders, managing funds in excess of $1 million. Others have become full-time traders working from home in their pajamas, and others are just simply doing it as part-time for extra income on a monthly basis. So, I've done a lot of workshops over the years. These are some of the testimonials that you're seeing here. So, I think that I'm equipped enough to actually teach, coach, mentor aspired traders who wants to become professionals. So again, as I said, I've been around the block a few times. Now, one of my best trades to date is this trade that you're looking at here. This was from 2015. And for anyone that tells you that you're able to do this consistently every single day or every single week, they're lying to you. Now, in 22 minutes, in 22 minutes, I actually made over $33,000 in 22 minutes. Now, as I said, what we look for is consistency. But there are times when the market will be extremely grateful to you and extremely kind to you and give you the type of results you're going to see here. So this was a trade back in 2015. The Aussie dollar versus the US dollar. It was an interest rate announcement coming out. And based on the pattern that I'm looking at, which we will discuss later on in this webinar, based on the strategy, I expected price to go upwards. Now, if you look at the lot size, it's saying 40, which means each pip is valued at $400. Now, this takes nerve of steel to actually execute a trade like this. But as I said, doing it over the years, I've become immune to the market. I've become numb. Sorry. I've become numb to the market. And once I'm confident about a trade, I will execute it with everything I have. All right. So if you look at the bottom here, you're seeing 26,000, 31,000, and you're seeing as price continues to go in my direction, we're actually locking in profits at the same time. So in the event price goes against us, we're going to be closed out in profit nevertheless. So of course, if you look at the size of the account, it's over 300K. So of course, 40 lot size was pretty sufficient, and we could manage that nevertheless. And if you can see here, we have free margin, $295,000. So again, we were nowhere close to being over leveraged in this trade. And again, as I said, this is one of my best trades to date because I made 33,000 in 22 minutes. Now, do I make money consistently month after month? Of course I do. But do I have home run trades like this every single day? No, I don't. But if you're in the market, you will have the potential of achieving results like this. Now let's keep going. The very next day, there was another trade. And if you can actually notice here the similarity with the two trades. Can anyone actually tell me the similarity with the two trades? Just type it in the chat box. W's, double bottom. All right, you're close, but no, you're incorrect. All right, now let's go back a little bit. All right, now if you look at this pattern here, we were at a support level, and the market created an inverse head and shoulder pattern. Now, inverse head and shoulder pattern is simply a reversal pattern from a downtrend reversing back to an uptrend, like that. So what you're seeing here is the left shoulder. So LS, you're seeing the head, and you're now seeing the right shoulder. There we go, right shoulder. So that is considered to be an inverse head and shoulder pattern. Now, the very next day, as I said, we had the same pattern emerging. Oops. Right. So the very next day, we had the same pattern literally emerging in the market. So we have the left shoulder, we have the head, price rallied up, pulled back, created the right shoulder, and then the market took off. So once you're able to understand how the market actually works, you're going to be actually getting trades like this on a frequent basis. Now, it may not happen where you're making 6,000 on a trade in 5 minutes or 33,000 in 22 minutes, but it does mean that you have the potential of constantly making money in the market by simply identifying patterns like this. All right, let's keep going. And I will tell you something. These patterns happen over and over and over again in the Forex market. And let me give you an example. All right, so here we have a USD JPY pair, one of my favorite pairs. And as you can see, guys, market goes down, pulls back, down, pulls back, down, pull back, down, pull back, down. All right, so price actually broke this level of resistance, and then eventually price found itself heading back down again. Down, pull back, and look what we have here. Inverse head and shoulder pattern. Left shoulder, head, right shoulder. The market starts going up again. Up, down, rally, pull back, rally, pull back, rally, pull back, rally, pull back. So this happens over and over and over again in the Forex market. We just have to be able to identify these patterns accordingly. Now, what I'm going to do with you guys here is just to go through a simulation with you, a trade simulation with you, how to find and identify these key areas of resistance and support in the market. So here we go. Let me get rid of this. All right, so we're on a simulation platform here, and we're still on the USJPY. As I said, it's one of my favorite currency pairs that I like to trade with. Now, what I'm going to do is identify a level of resistance and a level of support. Now, of course, on this chart from where we're starting right now, the only level of resistance we can see, the only decent level of resistance that we can see is right here. That level right there. So if I was going to trade this, then I would want to see price hitting this level of resistance. And if I'm looking to exit the trade, then I want to see price exiting. I want to see price hitting this level of support. So this is going to be my target. This is going to be my entry area. At this current moment, price is in the middle of no man's land. So I wouldn't look to trade this at this point. I'll wait to see if price is going to hit this level. And if and when it does, that's when I'm looking to trade to go short or to sell the market. So you'll hear different terminologies in the market. Sell means short. And let's see if I can actually write it here. So sell, short, and then we have long, which is to buy. So ever so often you'll hear the terminology sell the market, or we're going to short the market, or we're going to go long in on a currency pair. So sell is going short and buy is going long. So just something to take a note of, guys. All right, so let's get rid of that. All right, so what we're doing here is we're waiting for price to head to this level of resistance. Now, there are 4 things that you need in order to trade consistently using this strategy. 4 things. Number 1, you need patience, because this is a daily chart. So each candle represents one entire day of information, which means price is likely going to take a few days to hit this level of resistance. So, the first thing you need in order to be a profitable trader is being patient. The next thing you need to do is to be able to identify key areas of resistance and support in the market. That's number two. Number three, you need to be able to identify high probability patterns at these key levels of resistance and support. And number four, you need to be confident of your analysis. So once you see that pattern emerging, you execute without fear, you execute without hesitation, you execute with a carefree state of mind, which means at the end of the day, the market will do whatever it wants to do. You've executed a trade, and the rest is left up to the market. All right, now before I get into the simulation itself, let me explain something to those who are pretty new here. Now, what we look for when we're looking for reversal patterns is on smaller time frame or on any time frame, the market usually does this. This is considered to be a trend. Now, a trend is identified as a series of higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high, higher low. So with this, we can clearly see that price is going upwards. Now a downtrend is identified as a pattern where we have a series of lower highs and lower lows. So the market's going down, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now a pattern is broken when two things happen. One, when it breaks what we call a trend line, and two, when it breaks the previous level of resistance there. Or in this case, when it breaks the trend line and it breaks a previous level of support here. So that basically tells me that what was once going upwards, the pattern, which is in an uptrend, has now been broken and price is likely to go lower. And in this scenario, price is likely to turn and start going higher. So these are some of the patterns that we look for at these levels of support or resistance in the market. So it's important to understand the concept of your resistance and support levels and also identifying these trends in the market. All right, so let's keep going. All right, so let's start the simulation. All right, so price did not hit that level of resistance there. It did not go up and hit that level of resistance, but price did break this level of support. So remember what I've said before, when a pattern, when the market breaks support, that level now becomes resistance. So what we're looking to do is we're waiting for to see if there's going to be a pullback in the market where we can actually get into a trade to go short. Now, let's actually add one more chart to this. So we're going to add the smaller time frame. So we're going to add the 1 hour chart because this is going to be the chart where we're looking for patterns. Oops, did it wrong. So the chart above is going to be your the chart above is going to be your daily chart, and the chart below is going to be your 1 hour chart. So we got the daily chart there, we got the 1 hour chart here. All right, so let's see what happens. All right, so price is trending downward. So price actually rallied up, retested these highs. We actually missed that, and then the market starts trending back downwards. So if you were to look at your computer screen when you're looking at a trade like this, you would say, okay, we're in a downtrend. because price has broken this support level and is now trending downwards. So your goal is going to be on your smaller time frame is to identify an area in where you can execute a trade to continue going short with minimal risk. All right. So here we see the market rallied up a bit. So if we decide to get into a trade here, and if you notice, the market is going downwards. So we're seeing lower highs, lower lows, sorry, lower high, lower low, and we're seeing a pullback at this point, almost a past resistance becoming support right around there. So if I was going to get into a trade here, I would want to get in somewhere along this level and have my stop loss placed above that high. So let's do that. So let's get into this trade here. Stop loss is going to be above this high. So let's say around 113. And we're looking for take profit. So we're at 112.25. So we're going to look for around 110 price, 110 to get out of this trade. So this is going to be a long-term trade. And because we have 2,500, we're going to up it a bit. And we're going to do, let's do, let's do a 100,000 unit account. So that's a $10 per lot, I believe. All right, so here we go. Now notice how price is consolidating here. Now, usually what happens when somebody enters into a trade and price begins to consolidate like that, anxiety usually shows up. And what usually tends to happen is that you tend to make irrational trading decisions, either exiting the trade too early or exiting the trade at a loss without giving the trade the opportunity to work itself out. So, you know, when it comes to trading, guys, sometimes this is something we cannot avoid, where the market just goes sideways for a few days or a few hours. We cannot avoid that. We have to be confident that one of two things is going to be happening. Either we're going to be taken out in profit, or we're going to be taken out with a loss, which is an acceptable loss before executing your trade. All right, so let's keep going. All right, so we got stopped out. So we got stopped out with this trade, which is fine. And we're now hitting this level of resistance here. So now that we're hitting this level of resistance, what are we looking to do? We're looking to go short. But before we go short, we want to ensure that we're seeing a pattern on your smaller time frame right here. So we've just lost 74 bucks, which is fine. Actually, no, we lost 74 pips, but we lost, how much did we lose on this trade? 1840 minus 2500. We just lost $660 on that trade. That's fine. All right, so let's slow it down a little bit and let's keep going again. Now remember, we're at this level of resistance. So on your smaller time frame, we're now looking for patterns. We're going to look for patterns to go short in the market. So far, nothing yet. All right, so now price hit that level of resistance right there. Price got rejected. Now look what's happening here. Price is now hitting this level of support in the market, which means all I'm doing now is waiting to see if price is actually going to break this level of support and give me a pullback where I can get into a trade to go short. So let's see what happens. All right. So now that price broke this level of support. Now this is what I was talking about, guys. We see that price was going upwards initially, making higher highs and higher lows. Higher highs, higher lows, higher highs, higher lows. Now that price hit that level of resistance here, what happened? Price just started trading lower. Now we had price breaking that support level. So in order for me to go short, I don't want to get in at this price. So I'm going to wait until price pulls back into a level of resistance to go short. So remember, past support becomes resistance. So if I'm looking to go short, then I want to get in around here if price pulls back into that level. So I am going to set a sell limit order at this point to go short with my stop loss above these highs. So let's do that. So we're going to go to right around here. This is where I want to get into the trade. So we're going to do a sell limit order at 113.12, and we want to exit the trade if the market goes against us at around 113.50. And we're going to still look for a take profit back down at these support levels at around 112. So let's see around 112. So price, and we're going to look for around 112. So that's going to give us 112 pips in profit right there. All right, so let's keep going. Place trade, and let's see what happens. So we have a pending order in place. Notice pending. So we have a pending order in place. Now the only thing we're uncertain of when we execute a trade is if price is gonna get our orders filled. We don't know that, but what we do know is this is the price point we want to get in at, and this is our stop loss up here, and this is the risk we're comfortable in taking. So let's see what happens. All right, so price took us in. And now we're in profit. Price is going in our direction, guys. And we just made money. So from initially, we started with 2,500. Now we're at 28.33. So we just made over $300 on that trade after covering our first loss of 74 pips right there. So now that price actually broke through that support level. Let me actually move this down a bit, and I'm going to add one more line here because resistance and support levels are zone areas, not a specific price point. So now that price breaks this support level, my bias of the market is to continue selling. So all I'm doing now is waiting for a pullback. Market goes lower, pulls back, lower, pulls back, lower. I'm waiting for a pullback. So once I get a decent pullback, then I'm going to execute another trade to go short. And all I'm doing, guys, if you notice, all that I'm doing is utilizing past resistance becoming support, past support becoming resistance. Look at that. Let's do it from here. All right, so let's actually look at that here. Market breaks support, past resistance becoming support. Market pulls back. Past support becoming resistance. Market pulls back into support, into resistance. Market breaks support, pulls back. Past support becoming resistance. Then it falls again. Past support becoming resistance. So if I'm looking to trade, guess what? I'm waiting for price to get back up to these levels to execute my next trade to go short. And it is as simple as that, guys. So let's see what happens. All right. So now that price is pulling back into this level of resistance right here, I can basically say, okay, I'm willing to take this 60 pip risk or 70 pip risk on this trade because I don't know if price is going to come all the way up into this level. So I'm willing to get into the trade at this price, but I'm going to keep my stop loss above here just in the event price goes against me, then I'm taking out with a loss. So I'm going to execute a trade here at market price. So I'm going to go sell. Then I'm going to enter my stop loss, which is going to be above here. So 112.45. And as for take profit, since I cannot identify a support on my larger time frame based on this simulation, I'm just going to throw one in and say my take profit is going to be at around 109. So I'm executing the trade at 111.81 and I'm looking for profit at around 109 and sell. And let's see what happens. Market starts trending downwards. So as price begins to move in your direction, one thing you want to do is you always want to minimize your risk as best as possible. That's what you want to do. You always want to minimize your risk as best as possible. So just waiting for one more break of a support like there. And then what I'm going to do now is move my stop loss to say 112. So I'm going to move my stop loss here to 112. So in the event price does go against me, I'm not taking out with a full loss or with a loss at all because I think I got in at 111.81. So with a 112, I've minimized my risk right there. And let's see what happens. All right, so price is consolidating at the moment and starts trending downwards. We're getting a pullback into the market. Again, notice past support becoming resistance, guys. Past support becoming resistance. Look at that. Market hit that level of resistance right there and turned. Past support becoming resistance once more. All right. Market starts trending back up a tad bit. $600, $798, $800. We're still in a downtrend, so we're still looking to maintain and hold position and continue to go short in the market. All right, so let's pause for a minute. Now notice what happened here. If I was going to actually get into a trade to go long, if I was doing a short-term trade, look what happened at the support level. So we had the market created this low right here, right? Then the market bounced back upwards and then came back downwards right there. Now look what happened here. The market created an inverse head and shoulder pattern and rallied. So if I was doing a short-term trade, a day trading or an intraday strategy, then I could have gotten out here, got into my trade here, and on a pullback, let's see around here, I could have gotten into this trade and take my trade back into this level of resistance, which is around here. But because I'm looking for more of a long-term trade, I'm holding on to this trade for a while because again, with this strength or momentum going downwards, this is just a minor retracement of the larger time frame. So I'm not shaken by this price movement just yet. So I'm still going to hold my trade, and if I see the opportunity to get into getting into more trading positions, then I'm also going to do that. So let's keep going. Now, as soon as price clears this level, if it actually does, then I'm going to look to minimize my risk again and move my stop loss closer to lock some profits in. All right, so there we go. We're back to support levels. And we just broke support. All right, so now that we broke support there, what am I going to do? I'm going to now lock profits in because at any point in time, price could actually start trending back upwards. So notice price broke this level of support right here. So if price pulls back into this level, that could be another opportunity to get into a trade, to go short. So let's minimize my risk. So now we're at, let's place my stop loss at around 111.20. And I got into the trade at 111.80. So 111.20. Let's close it a little bit lower. 110.50. So 110.50 is going to be around here. It's going to be around there. So 110.50. And see what happens. Market's still going down, guys. And boom, 281 pips. Look how much money we have made with just 3 trades. So we lost on the first trade of $659. We made profit on the second, covering our first loss. And then we just made over $2,554 on our third trade. Trading is not complicated, guys. It is simple. It is not complicated. A lot of people make trading complicated when it's really not. All we're looking for is these key areas of resistance and support, and we're looking for trading patterns. All right, let's keep it going for another few minutes and see if we can actually identify what we want to do here is we want to identify a base or an area of support in the market. One thing we do not want to do is chase after a trade. That's one thing we do not want to do, chase after a trade. So we want to see a base being built up here that suggests that this level is going to be a solid area level of support at some point. Now, if you notice this candle right here, it created what we call a pin bar, and that was just broken just now. So that pin bar didn't hold right there. And price still going down. Now, if you notice right around this level right here, let's do this. A base apparently is being created right here. Not yet 100% confident of that just yet, but we're seeing that price is holding at this level of support so far. Let's see what happens. Now, here's where this is where we can get a little bit more technical. Now, we are seeing the trend going downwards, right? So if we decide to say, okay, you know what? I'm going to use this as my resistance level, and this is my support level. If price actually goes up into this level of resistance, then I'm looking for a trade to go short. Now remember, we are in a downtrend, so we're not looking for uptrend patterns. We're looking for price movement. We're looking for price patterns that confirms us going short. So as long as price is here at support, yeah, we could look for a trade to go long into that level of resistance. We certainly could. But we don't want to do that right now. What we want to do is look for opportunities to go short in the market. So if price gives us the opportunity of going into this area, then we're looking for short opportunities on a smaller time frame. So let's keep it going. All right, so price is trying to get back into this level of resistance right there. All right, so price is now at that level of resistance. Boom. All right, so price hit that level of resistance there. We want to now identify a pattern to go short. So looking at the smaller time frame, again, here's the pattern. Higher highs, higher lows. Now if price breaks this level to go this support level, then on a pullback, I'm looking for an opportunity to go short. It's as simple as that. So here we go. So price actually bounced from this resistance level. Now we're waiting for confirmation on the smaller time frame. All right. Now, this is important because what we're doing here, not because we've already identified a key area of resistance, means that we're going to jump into a trade to go short. So this is why waiting for that break of a support level is important, because look what happened. Price did not, oh, sorry, not there. Price rallied up, pull back, rallied up, pull back, rallied up. Price did not break the support level. So price actually made a new high there. So now we're waiting for price to break this support level to go short in the market. So again, let's keep it going. Now I know this is time consuming, guys, but if you want to be a professional trader, you have to be able to have patience. It is key. All right. So now that price broke above that level of resistance, look where it went. Boom. Price actually got out of that level, and look what it did. It hit this past level of support, now becoming resistance. So let's move this up to here to see what happens. Since price broke this level of resistance, let's see if price is going to hold at this level of past support becoming resistance. So what we're looking for is a price pattern that suggests the market is going to go short. All right, so now we're seeing the market making small, subtle, lower highs and lower lows right there. So let's see. Boom. There we go. All right. So now that price broke this level of support here, and this is what I was waiting for. So this is where I said to you initially, guys, patience is important. So notice what happened. Market rallied up, starting there. This was your new low point. But then price failed to go higher multiple occasion and broke. So now this area becomes an area where I have interest in going short at. So if price pulls back into this level of resistance, then I'm looking to go short. Now I can also do another thing here to say, okay, if I measure from here to here, that's over 100 pips. I don't want to take 100 pip in risk. So at that point, I'm going to wait until price pulls back into one of these levels. So let's see if price is going to pull back into, let's say, this level right here. So I'm going to place my sell limit order here with a stop loss above this high, 110.51. And my take profit, so at 109.76, I'm gonna look for, oops, 110.51. I'm gonna look for, again, since I'm unable to determine 108.63 a support level, 108.63, let's do let's see, around 107. So let's be on, as I said, this is more of a swing trading strategy more than a intraday trading strategy. For intraday strategies, we'll be looking to be in and out within 60 to 80 pips, but we're looking for more long-term trading. All right, so let's keep it going. All right, price did not turn and take my trade in. All right, so price did not take my trade in at this point. There's still a possibility that price could get into this level to take my trade in right around here. But what I'm going to do, I'm just going to execute a trade here because, again, still got good risk to reward. Risking 70 pips to make over 100 pips. So I'm looking for at least a 1 to 2, 1 to 3 risk to reward. So that's still good. So what I'm going to do is I'm going to cancel this pending order right here. And then I'm going to execute a trade at current price because we got a good trade here at current price. And my stop loss is going to be above this high just the same, 110.40. And my take profit is going to be what I think was 107 initially. So place trade. Oops, stop loss is invalid. All right, so let's do that again. So my stop loss is going to be at 110.40. And my take profit is going to be at 107. Place order. Here we go. So we're actually in profit right now, 406, 300, $200. All right, now I'm going to show you guys something right here. Give me a sec. All right, that didn't work out. Right here, I thought this would have been a good head and shoulder pattern. I think it was right here. But price actually retested these highs and then dived. So that's fine. All right, so let's keep it going, guys. Now remember, this is actually a simulation of the live market. This is something that would have happened if you had gotten into a trade on in January. From January 2nd to January 11th, you'd have made over $6,000. Can't get any better than that, guys. Cannot get any better than that. All right, so let's keep it going for a while. But I think I've proven my point that by just understanding resistance and support levels, you're able to make money in the market. Now, we're at a support point right here. We see where the market is holding at support here. And we could just simply exit at this point because very unlikely its price is likely not to break this level. So we could exit our trade here, which I'm going to do that. So I'm going to exit my trade here. So we just made 6,200. We're up to $6,287 from a 2,500 account in just a few days. Now, I'm not saying this is going to be easy to do because, as I said, a lot of emotion takes play in when you're in a trade. You have to be able to maintain and manage your emotions in order to not make irrational trading decisions. So, this is just an example, guys, that by just simply looking at resistance and support levels, you can make money in the market. Look how simple it was. We identify key area of resistance here. Our first trade we got a loss because price actually broke that level of support. We thought price was going to keep going downwards. Instead, it retested this high. We had a loss. Then we got into a trade here based off price pattern and we got 111 pips. Then we got back into another trade and we made 281 pips. And look what happened. Price pulled back into past support, becoming resistance, and gave us another almost 100 pips right there. So that's one, two, three, four trades, and look at your account size. All right, so Malik is asking, how much do I need to get started? Well, depending on your broker, they have three different types of account. You have micro, mini, and a standard account. Now, usually I would recommend for new traders to start with a micro account where you're trading 10 cents per pip versus $10 per pip. And as you become more and more proficient and more confident with your trading and develop a good trading style, then you can go up to now a mini account, which you're now trading, sorry, which you're now trading $1 per pip. And then eventually, once you've gotten to that point where you're consistently making money after month, then you can advance up into the standard size account where you're trading $10 per pip. Now, to start an account with $10 per pip with a standard size account, you need a minimum balance of 2,500. To start in a mini account or a micro account, you need an account size. You can start with a minimum of $50 for a micro account, and for a mini account, you can start with as little as $200. Some brokers do accept as minimum as low as $100, but I would recommend more $250 to $300 to start a mini account once you're ready to go live. Now, I also urge you guys to practice with a demo account. Practice with a demo account. Get yourself familiar with the account, with the platform, with your trading style and so forth. And then start with money you can afford to lose. So hence you start with a micro account, which each pip is valued at 10 cents, not $10. So in the event you actually have a loss or a few losses, it's not going to be detrimental on you whatsoever. So, I urge you guys to, one of the things that I always say, and that is invest in knowledge before investing in the market. Now, it does not have to be me as your mentor. I'm not saying, yeah, come to me. It can be anyone. You do have a lot of good mentors out there. So I'm not saying because you're on this webinar, you need to sign up under me. You don't need to. But I would appreciate it, but you don't need to. You know, there are many mentors out there that are equally as capable, sometimes probably better than I am. I don't know. But it's important to find someone that has been in the market for a lengthy period of time, that have experience, knowledge in the market. Not just the knowledge, because knowledge and experience do not walk hand in hand. You have to have the knowledge, but there also needs to be the experience when it comes to forex trading. Now, For those guys who are here in Fort Lauderdale, um, I do host monthly webinars. So you can simply go to my website, mastermindtradersacademy.com/workshop, and you'll see the dates here. There is an upcoming workshop on the 2nd of June, 2018 at 3 p.m. So if you have not yet reserved a spot, guys, please do so. It's already almost booked out, if not already fully booked out. But, still reserve your spot and try to attend. And if you are attending, please come early because space is limited. We can only, I think, host up to 30 or 40 people. And I think right now we have exceeded 30 so far, I believe. So, for those who are in Fort Lauderdale and can afford to make it to the webinar, to the workshop, please do so. Um, for those who are interested in online mentoring or online coaching, then of course we look at fundamentals. We look at getting started if you're a brand new trader. We look at projecting resistance and support levels, just like what we just discussed in the just now. We'll learn how and when to use technical indicators, looking at multiple time frames, which we just discussed, looking at the daily chart, and then looking at the smaller time frame to identify key patterns. We'll also look at your personality, emotions, and the psychology of the trade, and key principles of trading, and useful strategies and tactics, you know, that will allow you to become consistently profitable over a period of time. So, you know, these are the packages that we have. Um, we have just videos, so you guys can get 12 videos for 199. You do get 30 days free forex signals inside my group once you register for the package. You get one training session with me, one on one, so online, just you and me, after you've completed the videos. So that is pretty cool. Next, we also have a 299. This is a group training course. So it's 12 online training sessions. You also get that same 30-day free trading signals. You get live webinars. You'll get access to the videos once we've completed the training session. And most importantly, you have lifetime access to me and other mentors within MTA Mastermind Traders Academy. So this is a group training session. The next class starts June 4th, and it's done 3 days per week for 1 month. And everything that we have discussed, plus a whole lot more, will be taught inside the training group. Now, if you're one that requires more personal attention, then we do also have the one-on-one package. So this is just me and you online every few days out of the week, and we go through from beginning to end, whether you're a brand new trader or you're a little bit seasoned, doesn't matter. Every um, every program is tailored to suit you, the individual. So again, it's 12 plus hours of training. You get 3 months of free trading signals. You also get live webinars. All sessions are recorded and it's all done online. And I try to be flexible with my clients because you're all working people. So sometimes time is a factor. So I try to be as flexible as possible. It's not carved in stone with the one-on-one. However, the group session is carved in stone because that's done Mondays, Tuesdays, and Thursdays at 10 p.m. every single week. The one on one is done basically based on my schedule, based on your schedule. We have a time set, and those schedules are set. Of course, we can adjust, we can alter if something comes up, and we can always reschedule. The 1299 package is 30 plus hours of online training, 1 year free trading signals, live webinars, all sessions are recorded, and you basically have me at your fingertips for 3 months. So, these are the packages, guys. And as I said, I don't think these packages, these prices are expensive compared to what's out there. I've seen packages as much as $5,000 for 4 days worth of mentoring. For me, I love what I do. I enjoy what I do, and I like to help others succeed. So the thing is, if I'm already making money in Forex, why am I going to break your pockets in asking you to give me $5,000 or $10,000? It's not necessary. But my time is valuable, my knowledge is valuable, and therefore I have to charge you guys, I have to charge something. So it's not out of reach to find 299. It's not out of reach to find 649, because when I just started trading, when I first got mentored, I paid $2,500. And between then to now, I cannot tell you how many times I've doubled, tripled that $2,500. So I've always said it's one of my best investment that I've ever made in my entire life, because I invested in me, I invested in acquiring knowledge that will continuously make me money month after month after month, year after year after year. So if you believe that 199 or 1299 is too much for you, then forex trading is not for you. I'm going to be brutally honest. If you cannot invest 12.99 or 6.49 or 2.99 or even 1.99 in saying, okay, I want to learn this the right and proper way from someone who has been there, done that. If you cannot see the value in that, then trading is not for you. Because by just simply looking at those YouTube videos and those ebooks, those are designed for you to lose. Nobody's giving away information for free. The information I just gave you guys, someone would charge $1,000 for that information. I'm giving it to you for free. But if you want to excel and become more advanced and become consistently profitable, then paying for one of these packages should be a no-brainer. But again, as I said, guys, I'm not the only mentor out there. There are plenty other mentors around the world that you can always sign up to. But please research your mentors, research who they are, what they've done, where they've been, and where they are today. And make your choice. So it doesn't have to be with me, but I would appreciate it if it's with me. And if so, then just hop over to mastermindtradersacademy.com/training-video, or you go to mastermindtradersacademy.com, sign up. One of my reps will call you, or myself will call you, and we can get you started ASAP. But if you want to get started right now, today, just head over to mastermindtradersacademy.com/training-video, training-video, and choose one of your packages. That's it. It's that simple as that. All right, so that's it for right now, guys, and I thank you all for attending. It was a pleasure hosting this webinar with you guys, and I look forward to the next one. Okay, is there a discount? Well, send me an email with your contact information at support@mastermindtradersacademy.com, and we'll see what we can do for you. And we do have options where we can do payment plans also, so that's not a problem. But again, guys, as I said, this is relatively cost effective. This is affordable for anyone who's serious about forex trading. The only thing I think I could do is provide you guys with a payment plan. So until next time, I will talk to you guys soon. Take care, and good luck with your trading. Take care. Bye bye.